$50,000 above list price? How can that even be possible? Well, right now, believe it or not, it's happening. Hi everyone, I'm Debbie Pellum with London Properties in Fresno. So if you saw my previous video, you found out one strategy to make sure you actually get the price you went into contract for. There are a few more things to consider when selling your house for significantly more than it's possibly worth, or considerably more than the neighbors have recently sold for. The first was to see if the buyer would be willing to remove the appraisal contingency altogether. However, many buyers aren't willing to do that. Another alternative, if they aren't willing to remove the appraisal contingency, is to see if any of the buyers are willing to give you a specified amount that they're willing and able to pay above the appraised value. Obviously, not to exceed the agreed upon purchase price. Well, how can this be helpful, or why would it matter? You see, if someone really wants your home, they may be willing to pay any amount for it. But as we learned before, the bank is only going to loan based on what the home appraises for. If the buyer removes the appraisal contingency altogether, it's sort of like writing a blank check. They can't be certain as to what the home will appraise for, so they have no idea what the difference is and how big of a check they may have to write. So many buyers are afraid to do this. Another option is to have them agree upon a specified amount that they're able to pay over the appraised value if the home does not appraise. Here's an example. Let's just say that you agree on a sales price of $350,000. And as a seller, based upon the advice of your agent, knows the home most likely will not appraise at that amount. The first option would be to counter out the appraisal contingency. The second option would be to ask the buyer how much they would be willing to pay over the appraised value. So let's just say the buyer says they're willing to pay $15,000 over the appraised value. If the home only appraised at $315,000, that means they would be willing to pay $15,000 over what the home appraised for. But that would also mean the seller would get $20,000 less than what was originally agreed upon in the initial contract, which was $350,000. This is where pricing your home correctly based on data an appraiser would use is so critical. When you overprice your home, it can be very disappointing to discover your home is actually worth less. It's my job to provide you that data to determine a reasonable listing price based on recent sales in your immediate area. Again, there's a lot to consider when selling your home. It's not always just as cut and dry as it may seem. So what's the answer? How do you protect yourself? You call a professional like me. I have helped many residents in the Central Valley just like you and would love to help you too. I'm Debbie Pellum with London Properties in Fresno, giving dreams an address.